Welcome to this explainer. Okay, let's cut right through all the doom and gloom we've been seeing lately. We're going to uncover what's actually happening beneath the surface of this recent market crash, because those wild headlines you're seeing everywhere, they're only telling you half the story. And honestly, they are completely missing the biggest, most fundamental shift happening in the market right now. If you spent the week watching your accounts bleed red as a staggering $1.3 trillion in stock market value just got completely wiped out in a matter of days, well, you aren't crazy for having that sick pit in your stomach. It was absolutely brutal. Over in South Korea, the sell-off got so bad that market circuit breakers actually triggered. They had to temporarily halt trading while massive giants like Samsung and SK Hynix basically fell off a cliff. People online were screaming to short the entire market, saying we should all go learn how to grow potatoes because the future was officially canceled. But look, this whole panic perfectly illustrates why we need to stop throwing money at random software firms just because they have some vague AI strategy. The reality is, nothing fundamental broke. Here's what's actually going down. The biggest tech companies on Earth, the hyperscalers, are locked in an unseen, massive physical build-out right beneath the surface. We're talking about burning unimaginable amounts of cash on a multi-trillion-dollar physical arms race. So if you're exclusively hyper-focused on the software bubble popping, you are completely missing the physical foundation that's actively being built. To really understand the game here, we've got to look at the three foundational pillars of what I call the AI iceberg. That's the memory stack, the digital landlords, and finally, the ultimate bottleneck, the power grid.
All right, layer one, the global chip choke point. Let's start with the absolute foundation, because right now it's experiencing a supply choke point unlike literally anything we've seen in recent tech history.
Let me ask you a brutally honest question. When you see the market panic and tech stocks taking a massive nosedive, do you really believe global demand for computing power just vanished overnight? Like, did everyone just wake up and decide, yeah, we've got enough processing power, we're good to go?
Of course not, and the data completely backs this up. Just look at high-speed memory stack capacity, which, by the way, every single AI chip strictly requires to even function. For companies like Micron and SK Hynix, their production is totally spoken for. 100% gone. Zero available. Their customers are so terrified of being left behind that they aren't just buying for the next quarter. They're actually locking in 3 to 5 year contracts just to guarantee they have supply.
And the bottleneck gets even tighter from there. The central choke point, Taiwan Semiconductor, is booked completely solid all the way through 2027. Just think about the massive scale of that. It's gotten to the point where Google literally had to cut its own chip production by 25% this year. Why? Simply because it physically couldn't get enough assembly capacity. The demand is so relentless that big institutional money isn't fleeing AI at all. They're quietly rotating into ETFs like DRAM and backing the actual physical chip builders who hold all the leverage.
Moving on to layer two, the digital real estate boom. Let's pivot to the second layer of our infrastructure iceberg, which is this massive, hidden real estate land grab happening right around us. Because think about it, you can't just leave these incredibly expensive, highly sensitive components sitting on a desk somewhere. They require incredibly specialized, temperature-controlled, ultra-secure environments just to operate. This hardware needs a home.
Think of it exactly like a massive shopping mall land grab. The hyperscalers, your Microsofts, Amazons, Metas, they're desperate to rent out store space inside these massive AI data centers to house their large language models. So there's this fierce race happening right now between data center landlords like Nebius, CoreWeave, and Iron. They're stepping in and building these digital malls as fast as humanly possible, just to meet an absolutely insatiable demand.
So, the absolutely crucial takeaway here is that this isn't some fleeting software fad. These data center landlords are taking on massive debt to build these sites. And why are they doing that? Because the payoff is mathematically guaranteed for them right now. They're locking in billions in pre-sales and contracted revenue from companies like NVIDIA before the concrete on the buildings is even dry. I mean, that is how desperate the need for physical space actually is. And that brings us to layer three, the ultimate bottleneck, power. This is the absolute bedrock of the entire system. Without this, layers 1 and 2 are completely useless.
I mean, what good is a trillion-dollar data center packed to the brim with the world's most advanced chips if you literally can't turn the lights on? Energy is rapidly becoming the single biggest make-or-break factor for this entire technological revolution.
Landlords are strategically moving to secure massive power footprints because you just cannot run a giant AI brain without an absolute ocean of electricity. Look at Iron's strategy, for example.
They're specifically targeting locations with massive grids, running facilities on the Texas ERCOT grid, and they're aggressively expanding up in Canada, where they can tap into entire 100% hydropower setups. They know that whoever controls the power controls the future of AI. Energy infrastructure is the ultimate foundation of the AI build-out, period. If you don't have the power to run it and the concrete to house it, the software layer completely evaporates. It just turns back into lines of code floating in theory. And this is the physical reality that the recent market panic completely ignored. All right, the infrastructure reset. So how do we actually apply all of this unseen data to the market panic we just witnessed? How does this completely change our perspective on that $1.3 trillion wipeout?
Well, the S&P 500 has never gone up in a perfect straight line. When a market runs straight up for months, a pullback isn't a shock. It's honestly mathematically overdue. So when you see a sea of red, you really have a distinct choice. You can either hit the panic button, lock in your losses at the absolute bottom and walk away, or you can look at the physical infrastructure data we just covered and realize that a market reset is just shaking out weak hands holding stocks they can't actually explain. A pullback in a fundamentally necessary business isn't a disaster, guys. It's a discount.
The era of blindly buying any random stock just because it has the letters AI in the name is definitely ending. The market is getting smarter, and it's forcing a reset. It's time to pivot your focus directly to these physical layers that actually matter. You need to look at the memory stack and the companies fabricating those chips. You need to look at the digital landlords who are securing real estate and pre-sales. And you absolutely must look at the energy companies powering the grid. Tribe check right here. Day traders flinch at red days, but real investors look for the foundation. So if you're still here watching this explainer, you are definitely not the panic selling type. I want to hear directly from you to boost our community discussion. Drop the word long-term in the comments below right now. Tell me, are you buying the infrastructure dip, or are you sitting on the sidelines in cash waiting to see what happens next? Let's get a debate going in the comments. Keep your eyes on the foundation. Because think about it. If the physical world can't keep up with this digital dream, what exactly happens when the grid finally maxes out? I'll catch you in the next explainer.